Hello and welcome everybody. Welcome to the Canis Major Incubator Video Deal Blog. This week we've got a very special case study that is being presented by a deal sponsor by the name of Siva Palchuru. And Siva, are you on the line with us here?
Yes, Phil. Good morning and thank you all. This project is actually about the Cedar Ridge Townhomes. It's a very nice little project. Before I actually explain, this is my background. My name is Siva Palchuru, and I did my PhD in chemistry, and then came to Texas A&M to do the postdoc, and then I also worked at Rice. Before I actually coming into real estate, I actually ran the environmental consulting business, and then I started commercial real estate and single-family real estate investment in 2008. And then I joined Phil and Chino group in 2015 and became Canis Major Incubator Deal Sponsor in January 2017. So that's my background, and this is where the actual project is. This is actually 44 townhomes that are located in Arlington, Texas, on the feeder of I-20 and 360 highway, which is a very high traffic areas on both sides. And when we got the lead, actually, I couldn't even believe myself. So me and my partner actually drove that on the same day, and we shopped around and we drove the neighborhood, and we just got like puzzled why this property is actually being sold. Actually, we got this property, we bought it from the bank. So when we went back and talked to them, they said that they had to sell it by the end of the year, and they specifically asked me whether am I ready to close this before the end of the year. And we told them very confidently that yes, we can, because the Canis Major network has the investors, which has the which can pull the funds, so that makes this project feasible. So getting onto that same day, so while we are there, we did the research on the property, as well as the neighborhood, the feasibility study. So we did, and so simply saying, the property actually was built in 1980, but it looks like it was built a lot later than that. The total square footage we're buying is 45,753. We are still classifying this as a C-class property, but this is actually close to, can be called as a B-class property. Yes, for sure, it is in a Class C neighborhood, but it's also regentrifying, and I'll explain it to you later a little bit on the thing. And here is the location of the property, and there is a 360 highway and I-20 and all that stuff. So here we can see very closely, this is Fort Worth, and this is Dallas, and this is the Arlington area, and this is a 360. You can see that this is right at the intersection of 360 and Highway 20. And when you come on this side, there's all like a lot of warehouses and storage facilities are popping out like crazy. And when we drove around, that itself convinced us, besides it's a great location of Arlington, that also gave us the strength, saying that yes, we can go ahead and increase the actual rents compared to the market rents. And that's what had happened. So almost on the same day, we not only finished our due diligence on site, we actually went back and we did the financial analysis, and we pretty much concluded that we really would like to go on to the project. So immediately we called the agent to give us the information on the current rental and financials, whatever they have. So we got on the same night the information about the actual rental and the T12. Actually, they don't have T12. They had only T3 because this is owned by the bank at this time. So it's the bank actually foreclosed on the previous owner. So which is fine because T3 is good enough to support the data for us. We made our own calculations, and when we did the evaluation, we thought that we had a great discount here. So we made an offer the next day morning to the bank, saying that we could able to move in, and with the $100,000 hard money from day one. And the bank actually accepted our offer, and we showed the proof of funds by the next day morning. So it's all going at a high speed. Like lots of things are happening, and we had to keep track of all those things. Like one side, the contract is being done. The second side, we are showing the proof of funds. The third part is we are also doing getting all the people that are going to do the due diligence to be done very fast. All me and myself and my partner did is we walked through the units. We did not do the full due diligence. So we are teaming all the people to get the due diligence done. And we could able to do all those things. And also remember, we have Christmas coming ahead of us. So I couldn't able to waste any more time. So, and the bank also looking to close this as quickly as possible. While we are actually doing that, the bank actually did their part. They already chose the title company. They sent the title information to the title company, and by the time we have the contract, title company has title commitment, and we already given the $100,000. And immediately the same day as the contract is being executed, we did the due diligence. So there is no time gap at all. We went with a licensed plumber, licensed electrician, licensed mechanical, building inspector, and the other rehab crew, as well as the roofer, and the few more investors for training purposes, because they all belong to the Canis Major platform. So we took them so that we can show how we do the due diligence process. So when we did that, there was no surprises at all. And on the same day, we are on day one of the contract, and we got clearance from all aspects. The roof is in good shape. The foundation is in good shape. Plumber told that we are in good shape on that. There are no surprises on electrical and mechanical. Everything is good. Except there is a little bit drainage issues, especially the stormwater drain and everything. But they already trying to correct, and we thought that a little bit, if we set aside some money, that would be good. And if you're all looking at this, this is the actual unit mix. And if you look at it, unit mix, we have 2 bedrooms and a 3 bedroom. We don't have any 1 bedroom. What that really means? It means that it's a good family atmosphere. And the lowest square footage that we have is 925 square foot. It's almost like townhome, right? You have 2 bedrooms upstairs, you have 2 bedroom, the living and living area, kitchen, and the some of them have attached garages. So that's a good plus point. So that is the reason we could able to give it to the market rent at that time was $1.02 per square foot. But we could able to increase this to $1.10 based on our research. And also at this time, because it is owned by the bank, they were not charging anything back to the tenants on the water or on the additional parking or anything like that. So we thought that we could able to create more value, bring to our investors by charging for water, by charging the attached garages, so all that stuff. So we could see that here is the 920 square feet, 2 bedroom, 1 bath, and it varies up to 1,025. And then 2 bedroom, 2 bath starts from 950 square feet to 1,100 square feet. And the 3 bedroom, 2 bath, this is just like our single family homes. 1200 and they're going at 1220. What they're getting at 1220 is that the water is included. If we take the single family home, we had to pay for water. We had to pay for a lot of additional. They had to maintain their own lawn care. They had to do lots of other stuff. Whereas here, they're all included. And we thought that 1,200 square feet is a good square footage. We could increase that to almost 1,300 to 1,350. And that's the logic behind it. When we took over, when they submitted the rent roll, out of 44 units, only 37 were them occupied, and 7 of them are not occupied. We said that that's fine. We could able to rent this in 2 months, and we went ahead and closed this. So when we ready to move on to the next level, we have title got reviewed, and we got all the contracts reviewed, what contracts needs to be assumed reviewed, and then we said to the bank that yes, we can close. Let's move it to the 29th. So we got everything done. Actually, when we went to the closing table, the bank was not ready to close that on 28th. So that's why we had to move it to 29th, because there is one document that are important for clean title work. The seller didn't have it. So we had to wait till 29th till they get that. That needs to be done. That is very important for us to note, because when you are moving with this rapid pace, you also have to make sure that you are actually buying the right property and from the right people. And that's why all this documentation has to be done. So even my attorney group actually moved at the same speed that we're doing. So I was lucky enough to have all that team, and also the Canis Major platform made this possible, because we could able to raise 3.2 million in less than 10 days. So what we did here is, our plan was at the time, we are assuming 44 townhome units, and we thought about improvements are needed, both interior, only interior, not both interior and exterior. Exterior is very good, except the stormwater drain that I mentioned, but that's easily correctable. And we could increase the market rents, increase the rents above the market rents. And we also could improve the occupancy over 90%. And then we expected to return the double-digit return to the from the operations to the investors in year 1 itself. And we expected to sell this property in 5 years. And this happened in December 29th. So today is January 23rd. We are actually less than 30 days of operation. I'm using the date here because that's very important. We could able to rent 7 units, because we put in 7 different crews to get all those 7 units done. So we got all those 7 units done, and we rented all of them, and actually people have actually moved in. And today is the last apartment that the tenant is moving in. So during this course, there are 2 people moved out of this process. So now, as of today, we have 42 units occupied out of 44. So we are already about 95% of occupancy, which is way above the our projections, because we want to achieve this in 2 to 3 months, whereas we achieved that in the first month itself. So this is going to return a very good double-digit returns to the investors. And so the actual financial data here is, we purchased the property at 3.2. The cost of improvements to improve the units, interior upgrades, as well as some stormwater drain issues. And then we have soft costs at 400,000, and the present NOI, what we projected is 285,000 approximately, and the present cap rate is 8.9. This is very important because this is in a prime area of the Arlington, and getting at 8.9 is very, very lucrative deal because the ongoing rates in Arlington area is around 6.5 to 6.75. And so right now the NOI is 284. We have expected NOI that projected to be around 350,000. And as I mentioned to you today, the cap rates are around 6.5 to 6.75. So we are, if we can capture the 6.5 cap rate at an NOI of 350,000, we would increase the value by 5.4 million, which is basically we're increasing the value by $2.5 million with a $100,000 of capital improvements. That is very significant to our investors because we are buying this property at a discount. Even if we go on this at a cap rate of 6.5, even at the 284,000, the valuation will be close to 4 million. So 285,000 divided by 0.605 would give us at least 4.3 million. And we did not pay for 4.3 million. We paid only 3.2 million. And that's why we jumped onto this deal within that short period of time. So we thought that our money, we put it to work, is well worth. Going into this, so this is what we projected to the investors in the investor form. So projected investor return, assuming that 100,000 is invested, total return in 5 years is $310,000, including the 100K investment with the principal. So this is how the breakdown is. You invested 100,000. This is the year 0. On year 1, you get 12.8% cash on cash returns from operations. Year 2, we are getting at 14%. Year 3, we are getting at 12.1. The reason why it went down because the year 3, the 2-year interest-only period is ending, and then the principal will kick in, and that's why we had to take it back to 12.1%. And year 4, it is 13.7. Year 5, it is 15.1, and total return is at the time of the sale, it's already at 142%. So the overall return is 210% without adding the $100,000 of investment. If we add that, then it will become to 310,000. With that, we are already to say that we are already ahead of our projections. We are only 1 month into this operation. Not even first month is completed. We already leased 7 units and we increased the occupancy to 95%. So we are very, very confident that we can actually achieve these goals that we presented here. And that concludes for today's presentation. And I'm very, very happy to present this to you guys that even in this market, we could get value deals.
Well, Siva, thank you so much. I can see the excitement in you presenting this deal here today on the video blog, so really appreciate that. And, you know, there's a saying in real estate that you make the money on the buy, and this is a perfect example of that. Siva looks at a lot of deals before he actually picks one that's worth doing. You know, we have a huge network of people identifying opportunities. The Canis Major Incubator has a reputation as a group that's able to fund deals and evaluate deals and pull the trigger and actually do deals very, very quickly. And because of those resources and that reputation, when a bank or broker or seller has a property they need to get rid of quickly, and this was a perfect example. You know, the reason you got such an unbelievable deal here, the reason you were able to buy this at such a big discount, is because you had somebody that basically needed to sell something fast to clear it off their books. So when they needed to sell something fast, well, they needed to find a buyer that could fund, you know, a few $1 million deal, evaluate, pull the trigger, and actually close on that very, very quickly. That's a very, very short list of buyers. Canis Major has a reputation of being able to do these types of deals, fund these deals, evaluate these deals, pull the trigger on these deals, and thus bring the very best deals there are in the marketplace to the Canis Major community and investors. And thank you so much, Siva, for sharing this little gem with us today. Each week at the Canis Major Incubator video blog, we present a new example, case study, lesson, etc., on commercial real estate investing in Texas. We'll see you next week for the next video. Thank you again, Siva, and thank you everybody out there.
Thank you, Phil.